Happy weekend. Today is November 23rd, 2019, a Saturday. Today's segment is titled, Sideways Movement Could Lead to Better Than Expected Outcomes for the Stock Market. Hello, I'm Jonathan Gurney, Portfolio Manager at Gurney Financial. The purpose of these videos is to educate, keep clients aware of what is happening in the stock market. Our goal is to close the gap in communication between clients and the actual person managing their assets. We use fundamentals primarily and technicals as part of our analysis. We hope the charts and education help clients and viewers alike. A friendly reminder, this video is not to be taken as financial advice. Should you have questions, feel free to reach out to us through email or social media comment section. We just released a new website. We want to show it to you real quick. We took your suggestions, but it's a great way to keep clients up to date and aware of what is happening, and it's just a great way to stay in the know of what we're thinking. So we're going to transition there, show the website to you. We're still working on a few things, but it's definitely a much better, cleaner version of what we had. So that's the main page. For clients, the client login, pretty self-explanatory. You can log in through either here and a new resource that we also took part in that we believe is going to be very helpful is a product called Circle Black, which allows you to put all your information in. It'll help us for reviews, not just stuff that I manage, but insurances, everything, so we can see everything on one page. So that'll be a great resource for review meetings and performance tracking. The FAQ is another one for kind of educational, our philosophy. If you want to check out the About Us section, but this is not a bad section at all. Like if you're not a client, you're questioning our thought process, check some of these out. We'll continue to add more once we have some time. The blog is where you would go for number one, this video, and feel free to subscribe on YouTube and it would actually automatically be sent to your phone. But if you're behind, these videos will all be here and any write-ups would be below there. So definitely an upgrade there. We are going to now transition into the 2-minute drill, which is new. I'm going to restart the timer and we will go from there. Basically, I have 2 minutes. It's probably going to be a little bit longer. I got to get better at this in showing you what happened throughout the week. So here we go. For the week, the indexes are right here. So DJA, NDX, and NASDAQ, and the S&P 500. In short, they had basically sideways to down movement this week, kind of expected after a fantastic rally. In general, with the exception of gold and real estate, risk-off areas in treasuries, silver, utilities, consumer staples outperformed. So that's a general summary there. It was kind of a mixed picture in terms of sectors. It's good to see healthcare and financials do well, but really you saw many sectors struggle this week after just some outperformance. So it was interesting to see real estate struggle. I would have thought that this truthfully would have done well in this environment. It still could, but just kind of interesting to note that. And finally, some of the charts, key levels that we are watching. The 10-day moving average, this red line showing here, which many institutions watch, we have been right at this for well over a month and closing above there. That's, again, a key level that many institutions are watching. This is a heck of a rally, but we're still staying above it. Key support below, as you can see, the resistance above is basically the top, trading all-time highs. And we could test the 3091, 3080, and 3067. And that's all three of these lines that I showed you here. So overall, the sideways movement is very good. Not a bad thing at all. The RSI level, sideways movement can lead to a decrease in the relative strength index. That is what happens. So despite us being high in price, it does not mean we cannot go higher. I want to make that very clear. I know we're at the 2-minute mark, but I still got to keep going. This kind of shows you active asset managers and how much they have currently invested. On average, 78% have their portfolios invested. 78% of their allocation is invested. You're seeing something that is very important that I really want to focus on. Over the last 10 years, periods of sideways consolidation, sideways movement leads to better pricing. Again, these moves are 25% moves here. Sideways consolidation, that's a 50% move. Sideways consolidation, 50% move. Sideways consolidation. So you're saying, hey, it's a heck of a year. We've had a 24-25% year in the S&P 500. Guys, we've had sideways consolidation for almost 2 years now. So us breaking out here could become much better than expected. So have an open mind to that. The fear index, I want to show you this. I know there's a lot of lines, but bear with me. The fear index, when low, usually the stock market is doing better. So lower fear gauge, lesser volatility usually leads to better pricing in S&P 500. So what am I seeing here? This is basically June to October 2018. Then the VIX spiked. What happened to the S&P? It went down. So usually an inverse relationship between the two. I usually get a little concerned when it's here, but as seen throughout history, we can remain here through some time, and it could be very possible that we remain here at these levels for quite some time as well. So be open mind to that. It does not mean we cannot remain at these levels for quite some time. And finally, momentum or growth names versus values. You saw over the past couple weeks, growth played a little bit of catch up from basically right here near mid to early November. Value flattened out, played a little catch up in growth. The last couple days of the week did struggle in growth. But overall, that's why I believe you're seeing the market hold these levels, because growth wanted to play catch up, struggled the last couple days. But overall, price action has been fantastic. That's basically the summary for the 2-minute drill. I'll work on getting these shorter, but hopefully you're seeing what I'm seeing and saying that this, don't just assume because we're at all-time highs that we cannot go higher. That basically wraps it up. We're gonna a client asked me to do a review of NVDA. Full disclosure, we don't own it, but we're gonna go over a fundamental perspective and technical perspective of that stock. And let us know if you have more topics you'd like to discuss. We will hit some of those. So finally, we want to kind of close with our final remarks, and we will end the video. So in conclusion, I do not think it's going to pay off to be overly bearish or bullish. We're kind of in a chop period here. Short term, I'm a little concerned because of what I'm seeing in the VIX. That could definitely spike. A 2 to 3% dip in the market is normal price action, not a recession. That is likely to occur. But midterm, I do believe there remains some gas in the tank. Fundamentals are okay because expectations are low. Again, it's not a bad backdrop when expectations are low going in. It allows for many companies to outperform expectations, and that's what we're seeing here. Sales growth is really not that great. Growth names did well early this week, then struggled later this week. A sustained uptrend could likely occur soon enough, but in the meantime, expect some chop. I mean, this is normal price action. Support below, again, 3103, 3090, 3080, and 3067. We are not trading the index. We're just watching for the general market, what it's doing, knowing 4 out of 5 stocks are going to follow that trend. Fear levels remain very low, which is a little concerning. We discussed that. Again, here's the summary. Large amounts are still sitting in cash, optimism in trade, low expectations on earnings, a somewhat easing Fed, an okay Fed at this point, probably not going to cut for a little bit until we see worries. All over a 1.5 years of consolidation, that's not a bad backdrop. So keep in mind that this could continue higher. That's basically the summary of this. Don't just assume because we're at all-time highs we can't go higher. Thank you so much for your time. Ask questions, drop us a line if you want to discuss anything specific. We'll end it there. Thanks, you guys. Another video will come out on NVIDIA, so pay attention to that if you're interested. Thanks again.